Hello, once again, I'm BR Schultz, SP 500. Thank you for joining me. We saw the market's bottom for the predicted June 24th, 25th low. I believe there's going to be 5 waves up from that June 23rd low. And so that will take us into, I believe, around July 18th peak. And I think there'll be like a July 3rd peak and then like a July 10th peak. And then the final peak would be around July 18th, in my opinion. Max value I'm looking for is like 62.50. So it could be a scenario where we keep hitting that peak level and then breaking down, kind of like what we did in February after the June 24th peak. Then the markets crashed right in June 27th and kept on hitting that similar peak and then crashed, did their final crash into March, April. So after that 5th wave up, I believe, into roughly July 18th. That's where my primary focus is the date. Around the July 18th time frame, plus or minus 1 day, I believe then we'll witness like a negative 7.77% crash in markets until late July, August 1st, and then we're going to have a new cycle begin. So that'd be like a 5-wave structure again on the macro scale. So kind of like what you saw from March through current day. We see like a 4 to 5 month cycle, and then usually have like a month-long crash, a month-long exhaustion. And again, my target for September 2030 is roughly 10,350, and we have about 270 weeks until the Great Depression kicks off, in my opinion, and that will take 3 to 4 years to unwind. And that is largely due, again, to Jerome Powell and his, I think, really poor performance over the last decade. I think either that or he's following a system that's been generated for him to create a depression. And so therefore he just follows lockstep with the system, and therefore it kind of guides him to create a Great Depression. You know, someone else could have created it from anywhere in the world, so to speak. You know, you could have very wealthy billionaires actually guiding his interest rate decisions. If they created his software, they could obviously probably create any type of update they want to guide his interest rate decision. I went over that in the last part 7, I believe, of why I think Jerome Powell has created the Great Depression. But let's move on to what I believe I'm learning about in the Einstein model. Thank you for joining me. Okay, so here is, we've seen the Einstein model, and essentially what I've learned is that you need touch points with volatility in those touch points. Essentially, like going into mid-April, each one of those touch points on the red diagonal line had a lot of volatility, meaning the line like changes directions going into and out of the touch points. So going into April, you had the Einstein model blast into the red diagonal, then drop out of it, then pop into it, then pop out of it, then pop into it, then pop out of it. And that created the volatility in the touch points, and then it created volatility in the future. So crash in mid-April, and then you saw the same into mid-March of 2025. You saw the volatility of those touch points. You saw from that diagonal gold or orange line in the Einstein model, the first touch point, the graph popped out of it, and then it dropped into it, then popped out of it. And then what I think is a really important point is the last point in the touch point series is at a break in the model completely. So at the around the February 18th point in time, the model broke down, and that was the last point where the trend line touched. And so I believe that creates the crash as well. So I believe that's what we're seeing going into the late July crash in markets. You see from the yellow 2, 3, and 4, going into 2, the model popped into it and then popped out, popped into point number 3 and popped out of point number 4. And I think dropping out of point number 4, where the model breaks out of the point number 4, and then the trend line exits through that very corner. I think that's what's really important, because that's a sharp break in the model, and I believe that what creates the 7 to 10% crash in markets around the end of July. maybe Jerome Powell announces his retirement or something, and maybe the markets crash, or maybe doesn't move rates or whatever. But then at that late July, early August bottom in markets, we would see a new cycle begin for 4 or 5 months. So that could take us into a December peak. And then each one of these points essentially is followed by 5 waves. So you see like a 5-wave structure come out of each one of these points. And so I believe after the June 23rd low, we'll see a 5-wave structure up into July 18th, roughly, plus or minus a day for a peak. And then you'll see the 8 to 10% drop or decline into late July or the August 1st time frame for the final bottom. And again, and then a new cycle would start. And obviously my macro peak for the end of the decade would be 10,347. And I believe that will kick off the Great Depression. And then also my note on the screen, obviously it says we need 4 to 5 hits on the trend line to create a future bust and collapse in markets. And then there's a 5-wave daily movement that's created in the daily candles of the futures market to form the next peak in the markets. So again, there'd be 5 waves up. So we've seen markets go up from the June 23rd low, and then we'll see probably a peak around July 3rd, and then markets maybe crash the next day, then up until like July 10th, and then crash, and then we'll see the final pop in markets up in July 18th, and then after that, I believe they'll crash for about 7 or 8 points, 7-8%. Now, could they crash 7 or 8% from like a July 3rd peak? It's possible. I'm not really sure how the crash will unfold, but I believe it will be like a 5-wave structure into the final peak in markets. Could it be a lower peak? It certainly could. But I believe that the ultimate peak to ultimate bottom will be about a 7 to 10% drop overall. And so that's just an update for today. Keep it around 7 minutes. Thank you so much for watching. I'm BR Schultz, SP500. As we journey over the next decade into the end of the Great Depression, you can always follow my work, or you can always see, you can always track how kind of my giving a status or whatever, or gifting status that I've received. Obviously, I've been pretty horrible. I've suffered some pretty bad calls because I didn't call the April low correct. I failed at that. But if you want to follow my tracking, some of you are probably going to follow my gift giving just to make sport of me, which is completely fine. I get it. I put myself online, and you got to expect that kind of stuff if you put everything out there online. So understandable. But hopefully if I predict most of it right, or you just got to get right back on track, right? So if I can get right back on track with this late July call, early August, that's what I need to do. And obviously I'll learn a lot in the meantime, but I have a 10-year journey here. So thank you for watching. And again, that's a GoFundMe link that's down below the video. Thank you so much. Take care. Again, this is just a snippet of the GoFundMe page. I didn't want you to forget that, so thank you, and please bookmark it, whatever, and watch it over the next decade or into late 2034. Thank you so much.